We've seen some mixed results from stores reporting their sales results for the month of December, and it turns out that big blizzard that came right after Christmas did have some impact. Here to dive into the figures is Adrianne Shapira, Goldman Sachs senior analyst covering the broadlines retail sector. Adrianne, good morning to you. We are all excited in November about this momentum that was building among U.S. consumers. Why the disappointment in December?
Good morning, Margaret. You're right. We were excited. I think in hindsight, we saw a bit more of a pull forward in November. The fact is, we saw things trail off a bit. But, you know, what's interesting, it seems as if the real disappointment was more on the big ticket, consumer electronics. Some of the seasonal categories that you would expect to do well in December actually petered out. Apparel, on the other hand, was strong. Department stores did quite well, relatively in line. Mid-department stores in that 3-4% range. High-end outperforming in the high to low double digits. So I would say the disappointment was more on the traditional seasonal Christmas categories.
So perhaps that Best Buy early warning wasn't just a one company story?
Correct. I think what you're seeing is people bought TVs the past few years. The product, people aren't quite ready to throw out their flat screens for 3D. So the product cycle isn't picking up. And what you're seeing is the new and exciting consumer electronics items like the iPads are decidedly lower tickets. So you're going from $1,000 TVs to $500, and that hurts the category performance.
So are we seeing the department stores take some market share? Did we see that this Christmas from the specialty retailers?
Specialty is always mixed. Some are on, some are off fashion. So it's always a bit more hit or miss on, story-specific situations. But you're right. I mean, our department store index was up over 4%. Specialty was up only 1%. So clearly it does seem as if department stores are picking up some share. But what you have to remember is that within department stores, they've got footwear, they've got cosmetics. It's not just apparel. There's more at the department store versus specialty is decidedly apparel only.
Have you handicapped, weather versus just the consumer's ability to spend? How big of a cost was that blizzard?
It always snows in December. Last year we had a storm on Super Saturday, the Saturday before Christmas. This year it came after Christmas. So, frankly, it's more of a wash. I mean, for anyone to assume it's not going to snow in December in the Northeast is wrong. So it's always going to have an impact.
Welcome back. We're continuing our conversation with Adrianne Shapira, Goldman Sachs senior analyst covering the broadlines retail sector. We're digesting those holiday sales results that we're getting in here. What happened at Macy's, Adrianne? Why'd they miss?
Macy's came in line. I mean, the 3.9, and if you look at November, December, it was a very respectable 4.6. So, perhaps expectations got a little ahead of themselves, but we wouldn't call it a miss. I'd say the season was quite successful. The fact is they were the only department store that raised guidance on the heels of November. So again, I think November came out very strong, and December was respectable for them.
Right, because you're looking at the November-December period as the overall season here.
Correct.
Is there any buy-through into January this year? I mean, so often you see shoppers hit the stores and pick up the excess inventory at a discount.
Right. Yeah, I mean, I think, no one roots for a big January because that means there's too much inventory at the end of the season. So I think everyone ended where they hoped to after December. So January should be good. What we definitely have heard is that gift cards picked up relative to last year, and that usually bodes well for January.
And in your notes here, you've got online sales actually perhaps hurting traffic instead of complementing sales?
Sure. I think, you mentioned the storms. I think what you're seeing is online enables people to shop come rain, sleet, or snow. I think people are getting you can avoid the weather, you can avoid the crowds, and with free shipping as pervasive as it was this holiday season, online was a big driver and perhaps explains why mall traffic looked as if it decelerated from November, December. Another thing to point out, in department store comps, they capture online sales versus specialty doesn't. So that, I think, also helps explain why department store numbers look better than specialty.
Kicking off the year, we get so many equity strategists on giving us their view of what's to come in 2011. We hear so many expressing risk over high oil prices trickling through to gas at $4 or $5 a gallon, and joblessness still continuing. I mean, how much of an overhang and how much of a consumer comeback can we expect?
I think we're on the road to recovery. I mean, clearly the ADP number the other day was very strong. We're going to watch for that payroll number tomorrow, and that is probably the single most important indicator as we track our sales in terms of how the shape of that payroll improvement is key in terms of what's driving consumers' ability to spend. So that is going to be key. I would say that everyone is still quite cautious as it relates to inventory, and that's where you want to be. So they're controlling what they can, inventory and expenses. But to get that consumer out there and build that confidence, you really need to see stronger payroll.
So where do gas prices have to head before it becomes a real drag for the Walmarts of the world and some of the other discounters?
Sure. I think we're heading into that direction. I mean, there's kind of two ways to think about it. On one level, higher gas prices sure will crowd out some spending at the low end. But on the flip side, as gas prices go higher, you're going to have to lean on the discounters and perhaps they could benefit from a trade down as people are going to look to save more money at the dollar stores and Walmart. So as of yet, we haven't seen it impact. The dollar store comps have been quite strong, but it's definitely something to watch already at these levels.
So what are your top picks for the year to come? Do we see that return to the Walmart playbook and the JCPenney's and the Targets?
I think the middle is going to be an outperformer. When we think about Kohl's, for example, right in the sweet spot of improving payroll, the payroll tax cuts, that customer is probably going to benefit the most. We saw last year the high end do incredibly well. They will continue to outperform. But if we think about improvements of the second derivative, the middle is probably where there's going to be a better improvement, the Kohls, the Macys of the world.
All right. Adrianne, thank you so much. Happy New Year to you.
Thank you. To you, too.